Welcome to Thoughts on Investing. Every investor, from day one, is warned about fear and greed, right? But what if the most dangerous emotions aren't the ones that scream at you? What if the real threat to your portfolio is this quiet, slow decay that happens when you're not even paying attention? Well, today, we're going to dig into the two silent emotions that can absolutely sabotage your success.
Okay, before we get started, just the usual quick reminder. All this is for informational purposes only. It's not financial advice. Investing always involves risk, so please make sure you do your own research.
All right, so when you think about big investing mistakes, what comes to mind? Probably some high-drama Hollywood-style panic, right? But here's the thing. The real dangers, they're not found in all that chaos. They're actually found in the quiet moments.
So let's just get this out of the way. The number one threat is not fear. Don't get me wrong, fear is a huge force. It can absolutely make you sell at the worst possible time. But because it's so loud and so obvious, we're kind of on guard against it. We know it's there. It's not the sneakiest threat you're going to face.
And you know what? The same goes for panic. That classic rookie mistake of panic selling during a market crash? Yeah, it's bad. But again, you can feel it coming. You know when you're panicking. The truly destructive forces, those are the ones you don't even see creeping up on you.
And here they are. The real culprits. On one side, you have the noisy emotions we all know about, fear and greed. We spend so much energy getting ready for those. But the real long-term damage? That often comes from the silent destroyers, disinterest and boredom. And they're so effective because they operate completely under the radar.
So let's kick things off with the first one, disinterest. This is that sneaky emotion that makes you just walk away from the game right when the best plays are about to be made.
I want you to picture this. You've done all your homework on a stock, you love the company, you get the business model, but then, crickets. Nothing happens. The market just goes sideways for weeks, maybe months. There are no exciting headlines, no big green days on your screen. And slowly, you just lose interest. You stop paying attention.
And this is where this quote just hits the nail on the head. That quiet, boring period, that is exactly when the smartest investors, the big institutions, are often building up their positions. They absolutely thrive in those shadows long after the hype train has left the station and everyone else has moved on to the next shiny thing. Think about real estate for a second. It's a classic example of herd mentality, right? When prices are soaring and everyone and their cousin is talking about flipping houses, that's when the masses rush in. The excitement is totally contagious, but let's be honest, it's usually a sign you're already late to the party.
But here's the thing. Experienced investors, they do the opposite. They look for deals precisely when no one else is interested, when the market is slow, quiet, and honestly a little unpopular. It's the exact same thing with stocks. The best times to buy often feel completely, totally unexciting.
Okay, let's pivot to the second, and I'd argue even more dangerous emotion, boredom. See, if disinterest makes you miss out on great opportunities, boredom makes you actively create your own disasters. It's the king of the unforced error.
So, does this sound familiar? The market has been going sideways for months. You've got cash just sitting in your account and it feels like it's doing nothing. And then that little voice starts up. I should be doing something. Before you know it, you're forcing a trade, buying some mediocre stock just to feel like you're in the market.
Here's the perfect analogy for this. It's like going to the supermarket when you are absolutely starving. You know what happens? You start grabbing things you don't need, chips, cookies, all this junk, not because it's a good value, but just to satisfy that hunger pang. Well, investing out of boredom, it's the exact same impulse. You're just buying stuff to satisfy that urge to do something. So what's the solution here? How do you fight this? Well, the answer is something that feels really counterintuitive, but is incredibly powerful. It's the power of doing nothing. Yep, sometimes the most profitable move is no move at all. When there are no clear opportunities that fit your strategy, doing nothing isn't being passive. It's an active, strategic decision to preserve your cash and wait for a better pitch. I like to think about it like a fisherman. A great fisherman doesn't just cast his net randomly into the water and hope for the best, right? No. He waits. He observes the conditions, he finds the right spot, and then he acts. That's what the market rewards, patience. So how do we wrap all this up and turn it into something you can actually use? It's all about developing a new investing mindset, one that helps you master the quiet market.
This little table here really puts it all together. For disinterest, the trap is you just stop watching. The solution? The discipline to stay observant. For boredom, the trap is you force bad trades. And the discipline, it's staying patient. It's as simple and as hard as that.
And really, that's the big idea here. Sometimes the best trade is the one you wait for. The market is always going to present opportunities, but it does it on its own time, not on yours. Your job is just to be prepared and patient enough to act when that time comes.
Hey, if you enjoyed this explainer and it gave you something to think about, please don't forget to hit that like button and subscribe to the channel. It really helps us out. Thanks for watching.